The cryptocurrency market is changing fast. And one of the biggest topics everyone is talking about right now is the XRP ETF. If you hold XRP, trade crypto, or simply follow the market, this is something you need to understand. Make sure you watch to the end, because I'm going to explain why many analysts believe this could be one of the most important moments in XRP's history. And don't forget to subscribe to Satoshi Guy for more updates, insights, and crypto discussions like this. Let's start with the basics. An ETF, or exchange-traded fund, is a financial product that allows investors to gain exposure to an asset without directly buying it. In simple terms, a spot XRP ETF would allow institutions, hedge funds, and everyday investors to invest in XRP through traditional stock markets. This removes many of the barriers that previously kept large investors out of crypto. What makes this even more interesting is the strong performance that XRP-related investment products have reportedly shown. Some reports suggest that spot XRP ETFs logged 30 straight days of net inflows after launching, outperforming similar products tied to Bitcoin and Ethereum during the same period. If that trend continues, it could signal strong institutional demand for XRP. Now, let's talk about price action, because this is where things get really interesting. Crypto markets overall have been rebounding, but XRP has shown particularly strong movement. After dropping below the $1 mark in a sharp correction, the price recovered quickly, climbing back above that level in less than a day. Rapid recoveries like this often tell us something important about market sentiment. During that dip, many traders panicked and sold their holdings. But while panicked sellers were exiting, on-chain data showed something very different happening behind the scenes. There was a massive increase in activity on the XRP ledger, suggesting that experienced traders and large holders were accumulating rather than selling. One of the clearest signs of this accumulation was the number of whale transactions. In a short period, there were more than 1,000 transactions valued at over $100,000 each. That was the highest level of whale activity seen in several months. Historically, spikes in whale accumulation often happen near local bottoms when large investors believe an asset is undervalued. Another key indicator was the sudden surge in unique wallet addresses interacting with the ledger. At one point, the number of active addresses jumped dramatically within just a few hours, reaching levels not seen in months. Increased network activity often signals growing interest, speculation, and demand. So what does all this mean for the future of XRP and the potential impact of ETFs? First, ETFs can bring liquidity. When more money flows into an asset, price stability often improves, and large price movements become more sustainable. Second, ETFs bring credibility. Traditional investors who may have avoided crypto in the past often feel more comfortable investing through regulated financial products. Third, ETFs can create long-term demand. Unlike short-term traders, many institutional investors hold assets for extended periods. That means less circulating supply in the market, which can increase upward pressure on price over time. Some analysts believe that if demand continues to grow and adoption increases, XRP could experience extremely strong bullish cycles in the future. Of course, it's important to remember that crypto markets are volatile, and no prediction is guaranteed. Prices can rise quickly, but they can also fall just as fast. Still, the combination of increasing adoption, rising ledger activity, whale accumulation, and the expansion of ETF products has created a wave of optimism in the XRP community. Many traders are watching closely to see whether these signals could lead to a major breakout. Another factor worth considering is psychology. Markets are driven not only by fundamentals, but also by sentiment. When investors see strong recoveries, rising activity, and positive news about institutional involvement, confidence begins to grow. That confidence can sometimes fuel powerful rallies. Some enthusiasts even believe that XRP could one day produce one of the largest bullish candles in crypto history. Whether or not that happens remains to be seen. But what's clear is that XRP continues to attract attention from both retail traders and large investors. As always, the smartest approach is to stay informed, manage risk carefully, and avoid making emotional decisions during sudden price movements. The crypto market rewards patience and research far more than panic and hype. So to summarize, XRP ETFs could open the door to massive institutional investment. On-chain data has shown strong activity and accumulation during recent dips. Market sentiment around XRP remains optimistic, though volatility is always a factor. The coming months could be very important for XRP, and many investors will be watching closely to see how ETF demand and market trends develop. If you found this breakdown helpful, make sure you watch to the end of my videos for more insights like this. And don't forget to subscribe to Satoshi Guy so you never miss the latest crypto updates, analysis, and market discussions.